Looking at these numbers and everything else we've seen recently, the jobs rate, the broader comments from the governor at the parliamentary committees, is your read that it's a narrow path but a soft landing is still possible, or are you thinking a recession is likely now?
No, we think it is a narrow path. A soft landing is still the most likely scenario. But obviously, if the Reserve Bank continues down and follows up on the more hawkish commentary that it's had over the last couple of weeks, then that does increase the risk of a hard landing. But I guess the best outcome is that things cool off a little bit now. We continue to get some softer retail sales and jobs numbers, therefore the Reserve Bank, and wages numbers, therefore the Reserve Bank won't have to raise rates as much as they're threatening, which therefore reduces that risk of a recession. I mean, it's still a significant risk, but our base case remains one of a soft landing, although we would have to admit, as you just said, it's still on a narrow path.
And how does our economic circumstances, the inflation number, rates and so on, how are we faring compared to comparable nations internationally right now? I know rates have been rising in various developed countries. How does it sit as we speak this afternoon?
Well, right now, our interest rates are below rates seen in, say, the UK. They're above 4%. New Zealand, we just saw a rise today to 4.75% in New Zealand and the US. We're pushing around, I think, about 4.75% in the US, probably heading above 5%. And of course, Europe, though, Europe's down around 3%, but they've been lagging in all of this. They were slow to get moving. So on balance, you know, we're in the threes. Other countries are in the fours. On terms of inflation, though, it is worth pointing out that we haven't had the surge in inflation you've quite seen in Europe, where it got to 10% or more. Similar story in the UK, and of course the US saw inflation go to 9%. We're still a little bit below that. So those things can be used to say, well, yes, we've got more to do. You know, our rates are still low compared to these other countries. But by the same token, it looks to me like our inflation has probably seen the peak. We do have very sensitive household sector, and those things suggest to me that we're probably not going to get to the rates of interest we're seeing in these other countries, and I don't think we need to.
One of the difficulties internationally, we've spoken a lot about Ukraine war, but the COVID zero in China had a real impact in terms of bottlenecks for supply chains and so on. It looks like China might rebound more quickly than many had thought, and that has a positive flow-on effect for our budget and economy, Shane.
It certainly does, and it's one of the reasons why I think we will ultimately avoid a recession. If you just think about today, we got some construction data from the Bureau of Statistics, and it showed a fall in the December quarter. And you might say, well, that's going to be a bit of a constraint on Australian growth. But by the same token, net exports or trade look like they're probably going to add about 1% to December quarter growth. And as we look out through the year, that reopening in China will probably see their economic growth rate go from something like 3% last year, pushing up to 6% this year, which means ongoing demand for our commodities and strength in commodity prices, which I think will help keep the Aussie economy growing this year, albeit it's going to feel a lot softer than it was last year.